Let's talk about the new listing on the bourses. We do have Updater. It lists today and it is listed at a discount. It's a subdued listing, largely on account of the weakness that we've seen in the markets itself. A discount of almost 5% to its issue price of 300 rupees per share, though it's curtailed those losses and now sitting with a cut of just about 1.5% from its issue price. Importantly, remember, this makes it the fourth issue this year itself to list at a discount. We do have with us Raghu Tangirala, who's the chairman and managing director of the company, joining in to discuss their post-listing plans. Thanks a lot, Mr. Tangirala, for joining in. I remember speaking to you while the IPO was open, and now that the company is listed, can you tell us about the big growth plans for the company over, say, 5 years? I mean, what can the average growth for the next 5 years with margins be?
Great, and thank you for having me again. I just don't, today is the day we listed, and I just don't know about the price. I'm just hearing it from you. So that's the least of the problem for us. Since you asked on the growth, what we had projected in our RHP and what we have done historically is about 25% growth year on year. That's what we've done last 5-year CAGR minus the COVID year. So we'll continue to do that, or we'll continue to, exceed that. So we could look at 20-25% growth year on year the next 5 years.
Okay, all right. Hi, good morning, Mr. Tangirala. Congratulations first on listing. As you said, you've not seen the share price, but I'll tell you it's mildly lower. But that's not a problem at all. We want some numbers from you, right? So you're going to be growing.
That's what we are here for, right?
Yeah, so you're here to give us to help us out understand the business. So we got the revenue growth, which is good, 20-25% you're talking about, which you have done already. What about margins? How should they shape up from here on?
Okay, we are last year at about 7% margins. Yes. We will hope to improve that at least about 20-30 points every year. That means let's say about a 0.25% year on year. This is what we have also. That's in our business plan. So we're at about 7%, which is the highest in the industry. I don't think there's anybody who's in this space, the business services space, who does even half of what we do in terms of margins.
Okay, all right.
All right. You spoke about IFM margins being around 5% the last time we discussed. Mr. Tangirala, I just wanted to understand, this is not a very specialized business, right? A lot of players are in this space. So from a long-term standpoint, do you think that this 5% can sustain, or could there be any downward pressure coming here?
I think we've dropped from somewhere double-digit to 5% now. I don't think the industry will survive it goes down any further. As you know, worldwide, IFM is a scale game. It's always on scale. You can scale the top line, and then your levers or your operation efficiency. So worldwide, it's a single-digit margin. It's about 5%, 4%. That will remain that for at least for the next few years.
Okay, all right.
But I told you we have other business services which are much more profitable. So that's why on a blended basis we make that 7.5%.
Yeah, the BSS business, right? That gives you better margins. You explained that to us the last time around.
Yes, the BSS business.
All right. Inorganic growth has been part of your strategy as well, the M&A activity. And you've earmarked, I think, close to around 80 crores for that. I think in the last few years, you've spent close to 200 crores on inorganic growth. For the next 3 years, what kind of a payment are you going to be looking? What kind of acquisitions you're going to be looking at?
This 80 crores is a blind pool. That's what the regulators allow us. But however, we throw up cash because last few years, you said 3 years, we spent 200 crores. That was all from internal accrual. So we'll continue throwing up cash. We'll throw up year on year 100, 150 odd crores of PAT. This money is fungible. So I don't know the target. But what we have in the plan, the board has decided that we will add about 25-30 crores of EBITDA year on year.
It's 25 to 30 crores
top line size, but I know that EBITDA is what we will want to add inorganically year on year.
All right. You had alluded to that. So, we will, of course, watch out for how this EBITDA addition pans out irrespective of the top line. Just wanted to understand, in the BSS business itself, there is teleservice, there's mailroom, there's airport ground handling. What segment are you eyeing acquisitions in? And will this 25-30 crore be in one company itself in terms of EBITDA and, addition, or will there be smaller acquisitions of say 10, 15, 20 crore EBITDA each?
Good that you asked me. It'll never be so small. It could be one company or two companies at the most. Mostly it could be one company, and the space we will be in only in the business services, not in the facilities management. Like I told you, we want to be EBITDA accretive, so we will never do an acquisition lesser than our current EBITDA of 7%.
Okay, in that vertical BSS itself, you have teleservice, you have mailroom, you have airport ground handling. So if you look at inorganic growth, in which segment will it be?
It could be in the audit and assurance and the sales enablement. It could be. We have a business which you didn't mention is the audit and assurance sales. And then we also have sales enablement. That's what you call as telecalling. It's not telecalling, it's basically a B2B business. The telecalling also happens to be one of the portfolio.
All right, and finally, before we let you go, this 20-25% growth that you're guiding for going forward, will it be the same across both your verticals? How does that revenue mix change, 70-30 right now?
Right now, profit-wise, it's about 70-30. In terms of the top line, it's reverse. It's 70-30. 70 of IFM, 30 of basis. So this will, both are growing at 20-22%. So the ratio will continue to be that maybe the next 2-3 years. We will both grow at the same speed.
All right, Mr. Tangirala, thank you so much for joining in and giving us all those details. Wish you good luck once again for the future plans. Yes, you've listed mild discount, but that shouldn't worry because listing itself is a big achievement. And if you go ahead and achieve the guidance that you've been given to the street, then maybe the street will value you a lot more than what you've guided for. All right, take that short break. Come back on the other side. We'll get you more on the markets and individual stocks. Stay with Chartbusters.